What is up, you guys? It's Keith from Stock Hours here. Today we're going to be going over stop losses, how to set stop losses, what I personally do, and what I feel like you guys should do as beginners getting into scalping options. So let's get right into it. Alright, so we're going to be going over a few examples here of stuff that we see pretty frequently in the market. First of all, we're going to go over what I believe you should do as a beginner, right? So this isn't going to be an example based off of a chart. This is just going to be more of an example based off of discipline and sticking to plans. So what I personally think beginners should get into is setting a strict stop loss based not off of the chart, but just off of percentages. Because based off of percentages, this is going to tell a lot about your trading, right? Because if your average trades are hitting, 5 to 10%, you should not be having any stop losses deeper than 5 to 10%, right? I personally believe that a max stop loss as a beginner should be around 10%. The reason for this is because if you're going into the position with the same position size every single time, right, and you're taking a 10% stop loss, but you know that that trade, if it works out in your favor, is going to be a minimum of 10%, then this is going to keep you safe from going heavily red on the day ever. Whereas if you're basing something off of the chart, it could lead to having a wider percentage, but it also gives your trade more room to breathe. But with regular scalps, I would say you should have no more than a 10% max stop loss. This is also going to make it so when you take that stop and you take your re-entry, you know that when you take your re-entry with the same position size, you're going to be able to make back what you just lost plus some. So that is why I really like this method so much of just keeping the same position size and keeping the same strict stop loss of your percentages. So continuing on this is just going to show the importance of having a stop loss here, right? And this is a great chart to see for beginners because you'll see here the starting account balance $1,000. You take a 5% loss on your account, and I don't recommend you go in with your full account size, but let's just say, for example, you are, right? Your starting account balance $1,000. You take a 5% loss, you take a $50 loss there, but you only need 5.3% to make that back, right? Say your starting account balance is 10%. Okay, you take a $100 loss. Now, off of that $900, you have to make 11.1% just to get your starting account balance back. So on and so forth. Say you're going into a trade, right? You're trying to let it have room to breathe, but you really don't have the technicals completely down yet. And this is why that's dangerous for beginners, is because if you don't have the technicals completely down yet, you can't read price action perfectly. Say you end up taking a 25% loss, right? Now you have $750 to trade with, and now off that $750 to make back from that 25% loss, you need to make 33.3% back on your total account just to get back to where you started. So that's why I'd recommend having a 5 to 10% loss, 5 to 10% stop loss that's strict for all of your trades up until you feel like you are comfortable with reading price action. Because really making 11.1%, not that hard. Making 33%, that's going to take a little while. So that would be why I am suggesting this. So we're going to go ahead and move on here to a little bit more advanced stuff. It doesn't necessarily mean it's harder. It just means you need to understand price action and you need to understand your risk. And like I said, I'm factoring this in with we're taking the same position size on every trade because that's personally what I do for my own risk management. I don't size up heavy on certain trades. I don't size down crazy on certain trades because I know emotionally sizing up too heavy, sizing down too much, I know it's going to affect how I'm handling the trade, whether it's sizing up and I'm more nervous in the trade so I don't let the trade have room to breathe, or sizing down too much to the point where I don't care about it. And that might sound dumb, but if you have been trading for a little while and you have done that before, you'll understand what I'm talking about. So I'm just going to draw out a chart here, right, and give some examples of stuff that I see pretty frequently. So say our key level is right here at this perfectly straight line. We come up here on the stock. All right, maybe we're waiting for our entry because we didn't hit the level yet. So we come up here, we have this push, we pull back a little bit. All right, now we make some sort of support right here. We come back up, and here is where I may be considering taking the entry because we get that momentum into that previous high that's right at our key level. So say I enter right here at this line right here. We maybe come up, we test our level, or maybe we even break it by a little bit, but we come right back down. And this right here is a very valid spot to have my stop loss because I know this is the previous support that we just made here. And if we come back down and we end up breaking this, there's a very low likelihood that we're going to end up holding, and this would be where we would probably start to see a sell-off. So I know if we get below this line here, it's pretty much ruining my whole trade, or ruining my original trade plan. So this would be right where I'm stopping out, is this previous support. Boom, right here, and then it will probably end up saving me because we're going to end up selling back off. So that is something that I like to do, is basing my stops off of other support or resistance, depending on what side we're playing, right? And that's just one quick example, but that is something I really enjoy doing. And say maybe we even have a pattern here, right? Say we're forming a wedge where I am looking to play the downside here. I would be looking to enter at the break of this line and play it into a specific key level. Say this is how we're coming down here, right? My key level is right here at this low, and I would be entering here at the break of this trend line. Okay, so say we break this trend line, this is also going to save you from fake outs, right? We break this trend line, I'm in, right? We end up coming down, bouncing right off of the key level, and then coming back up. Where would be a valid spot for me to have my stop loss here if I'm not just basing it off of percentages? A valid spot for me to have my stop loss would be right as soon as we break this trend to the upside. So it really makes it a lot easier when you have something to base your stops off of. Always feel like you're doing the right thing. I know if we broke above this trend line here and I was still in this position, regardless of what percent I'm up or down here, say I'm only down 3% even when we break this trend line, I know once we break that trend line, it's not smart for me to be in that trade anymore. So I would be looking to get out as soon as we had some momentum push through this trend. There's plenty of situations that will happen where you have a specific pattern that you know, okay, if it breaks to this side, we're going to see some we're going to see some follow through, some continuation, and maybe it's not to the side we want. So I would like to see us break this trend and have some continuation and follow through here to the downside so I can play it straight through this key level and then exit on the momentum through that, right? But I know either way that we break this trend, we're going to see some follow through. So this would be the break where we get faked out. It doesn't follow through. We come back up. Okay, it's breaking here. We're going to end up seeing follow through here. It's going to be dumb for me to stay in this regardless of my percentage, right? And even if you want to stick to your 10% stop, say we break this trend and you still want to stay in just to see if it ends up coming back down, but you still have a strict stop loss of 10%, right? Say the break of this trend is 3%. You can still have your backup stop loss here of 10%. So that gives you a couple different ways to play that, even though it's basically the same situation regardless. You are just giving a little bit more time. I definitely still would not recommend basing your stops too far out percentage wise. That's why there's certain situations where even me, I wouldn't consider myself a beginner by any means, but I do know that I still need to stick to a strict percentage stop loss, right? So if there's a trade that sets up where, say, our key level is all the way up here, we open down here pre-market, and all we do is push. We have nowhere that's creating any sort of support, right? We are coming straight up to this level. If I take this trade when we come up here, I'll take it, but I know that there's no supports that I can base my stop loss off of. So I'll still stick to that strict 10% stop loss if we end up coming back down, because I have no previous supports to base this off of. So you can't just say, okay, well, support's down here, I'll exit out at support, because by the time you get back down here, you're going to be down 50, 60%, and that's way too far gone. If we want to bring this chart back over here and look and see what would happen if we took a 60% loss, right? It would take 150% just to get us back to break even. So that is another example of something that I personally do. If there's no supports to base a stop off of, or no resistances to base a stop off of, I will still just stick to that strict percentage loss. And now you might be asking, okay, do you use actual hard stop losses, or are they mental? There's a couple different ways to do this as well. You can do a strict sell limit or stop loss order, where it will sell you at a specific price, and it will sell you at a specific percentage if you can calculate out that percentage. I personally do not like to use these. I always just keep my stops as a market sell order, but I know when my stop is approaching, I need to be ready to click that button. If you have troubles with actually clicking the button and taking that loss, I would 100 million% recommend using an actual stop loss order or a stop limit order, trailing stop, anything that will just make you get out of that position if you don't have the discipline to click that button, right? So I personally don't do that, but if that is the last resort that you have noticed you cannot stick to stop losses regardless of how much you know you need to get out or anything like that, I would highly recommend using stop limit orders, because that will end up saving you. So I hope you guys took something from this video. I hope you learned something, maybe save your account. So yeah, if you did, drop a like, leave a comment, subscribe to the channel, and if you have any questions at all, DM anybody from Stock Hours, and we will help to the best of our abilities. And yeah, I hope you guys have a great rest of your week. It's Monday. I don't know if it's Monday when you're watching this, but it's Monday. Hope you guys end the week green, and I will see you next time. Peace.